Winston and Felix here with the day's insights. What the heck happened today in the market? Well, what happened today is that the labor market was meant to be slowing down, the economy was meant to be going into a recession, and instead the economy created more than 500,000 jobs. Double pretty much what we were expecting, and therefore the clearest signal yet that all that talk about a slowing labor market and inflation coming down and all of that is a load of drivel, and we can't trust it. And therefore, when the Fed returns in September, unless data for some inexplicable reason massively changes between now and September, then, well, rate hikes are just going to come in faster. There are not going to be rate cuts in the spring. Most of the sort of slightly smarter analysts seem to be now looking at the end of next year rather than the first half of next year for rate cuts. And what does that all mean? Well, it's not great for stocks, is it? And you can see that today in the market. It just means you're going to get higher interest rates. And by the way, also mortgage rates, right, have come down below 5% today. Again, not something the Fed wants to see because, well, the whole point is to slow and stifle demand, and they want those rates to be high. And when they're not, he likes to be put on his ears. Honestly, look at that. What does it mean for us? Well, you know what? It just means that the recession is more likely to be slower and longer. And by recession, I mean this kind of weird world of full employment. Unemployment is at 3.5%. That's near historic lows. And this weirdly high inflation. Well, why is it weird? Well, when you print 40% extra US dollars in the space of a year and a bit, surely that wouldn't cause inflation, so it can't be that. As therefore, it must be something really weird. We have to blame external forces undoubtedly, which is obviously what politicians are doing. And what does it mean for us? Longer period of time in which you can buy stocks cheaper. Honestly, that's just what it means. All the forward-looking stocks, all the big tech stocks will be looking at massive profits in the future. They are all suffering from this. But it's been a pretty good week overall, right? I mean, overall, the week has still turned out very nicely. My portfolio is up pretty nicely. I think I'm only down about 11% or something like that on stocks so far this year. And then, of course, up over 100% on options, aren't we, Winston? All right, that's pretty much the update from from Winston and me. So watch for that. Next week we get inflation numbers. If they also keep coming in strong, it just builds this case for another 0.75% rate hike in September. I think the bond yields are going to start going up again, and that will cause some outflow from the stock market. That's basically it from us. Winston, any other thoughts? Oh yes, Winston says, if you enjoy these little macro updates, would you let us know? Would you hit the little like button and put in the comments? If you'd like to see less of Winston, you'd also let us know. Wouldn't want to force him on you now, would we? All right, there we go. Thanks very much for tuning in.